Good morning. It's Monday, December 15th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So I hope you had a great weekend here and you enjoyed our Navigating the Week Ahead weekend note that we're sending out. Some housekeeping here. The equities and the currencies on my platform on CQG had rolled over the March contract. Now this Friday, nearly $5.2 trillion in notional open interest linked to the S&P 500. S&P 500 index products here are set to expire, roll over into the new year, making this the single largest notional expiration on record. I'll look at the gold market here, rising for the fifth straight day, nearing that fresh record here with many analysts upping their 2026 forecast, 4,900 on up, over $5,000 by the end of 2026. Really, it's the continued central bank buying and the private investor flows under Fed easing. Now, gold's break above the recent two-day chart high here, moving towards that 44.30 an ounce here, where any dips staying corrected above that 41.80, that's your key level of support. Only a sustained breakdown below 4,000 and 39.20 really takes an impact and a toll on the bullish trend. Now, looking at the precious metals, the ETF flows, well, we saw them buying gold, silver, platinum, and also palladium here on Friday. The exchange traded funds added about 146,000 troy ounces of gold to their holdings, and total gold held by ETFs rose 18% this year to 98.3 million ounces. This is the highest level since October 23rd. The reason why we track this is that when you start to see those ETF flows, they continue to pick up. We're seeing that underlying impact on the price of the gold market. You really want to see this market continue to broaden out, where more individual investors are continuing to add to the gold products here. So you look at the silver market, up 0.2% on Friday here, with year-to-date ETF flows rising about 19%. They added about 1.45 million troy ounces of silver in the third straight day of growth here. Palladium also increased for the 8th straight day. So if you look across the board last week, the ETFs increased their holdings in gold, silver, platinum, and palladium. The gold-silver ratio sits at about 68-1. And then you look at the broader picture with the equity markets, stocks look set to recoup some of the Friday losses here, those tech-driven sell-off here, with a big week of data releases ahead. You got the S&P 500 and also the NASDAQ up about 0.5%. The Russell 2000 up about 0.75%. Now you look at some of the global events, and some big things to keep an eye on this week are rate decisions coming out from the ECB, the Bank of Japan, and also the Bank of England. Looking at the interest rate expectations at the January 28th meeting, markets are now anticipating about a 26.6% likelihood that the Fed will reduce rates by 25 basis points to a target range of 3.25 to 3.5 at its January meetings. We're going to have no earnings releases here today. And when you look at the economic data, you do have the Empire State Manufacturing Survey going to be released at 7:30 a.m. Central Time, and then the NAHB reading on home builders confidence at 9 a.m. Central Time. So you look at the currencies here, we're going to quote March going forward as long as the platform shows it. The March dollar sitting at 97.93, edging a bit lower. Euro currency up at 118, edging a bit higher. You got treasury yields poking down just a bit at 4.16%. The VIX futures at 1650. That's quite low here, well below that 20 threshold where we start to see increased volatility. Bitcoin hovering right around 90,000. Ethereum, that's starting to mark some higher lows on the charts and starting to work its way back up, getting a lot of momentum overnight here and a lot of discussion about those stable coins going on those Ethereum networks. You look at the S&P 500 gamma exposure, well, it flipped back to neutral, implying that option positioning isn't heavily skewed in one direction or the other. Perhaps it's this big expiration coming up on Friday where these dealers are going to wait till after that before they reposition and roll. You go over to Europe and Asia, European stocks, they rallied as that risk appetite returned after Friday's tech-driven slide. You go over to stocks in Asia, they did have some weaker economic data come out here, so the MSCI Asia Pacific Index fell just under about 1%. It was the most in more than 3 weeks here, with the TSMC and Samsung were the biggest draggers. You go to central bank speakers here, you're going to have Fed Miron Williams and then also Miron again here on CNBC later on today. So expect a little bit of volatility from some of that discussion coming out as far as what the Fed is anticipating. And I think that we're getting a lot more analysis paralysis here as you've got this delayed economic data, and then you got these Fed officials which either seem to be leaning very hawkish or very dovish. punish. So, you guys got any questions? Shoot an email to info@bluelinefutures.com. You want to open up an account, it takes about 5-10 minutes to do so here. We've got a lot of different great futures products here, different contract sizes and things like that to get involved with. So, remember that futures and option trading, it does involve risk of loss and it may not be suitable to all investors. Good luck, good trading.